The city was cold, replete with these sheets of...
Hey everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at mainly the S&P 500 here. Yeah, we're also going to look at the transports. Let's take a look here first at the S&P futures. As you can see here, it's been trading at a downtrend, and then it did break support last week. You know, this 2600 level is a crucial level to hold. You know, you could get a drop down here to 2550 to test these lower wicks if 2600 fails to hold this week. Let's look here at the SPY. Put options from Friday. As you can see here, there were some nice percentage gains. Some of the options contracts were up over 300%. The ones that were down were out of the money, and it was Friday expiration, so they vaporized into the close. That happens if you're out of the, way out of the money. But as you can see, if you made a good, if you had the correct target, you could have had some nice percentage gains on that pullback on Friday. If you look here at this screen chart here, this is from Black Box Stocks. They put out great information all day long. I highly recommend following them on StockTwits or checking out their website. They have some great software. And so yeah, this information came out on Thursday. And look up here at XSP. That's the S&P 500 CBOE minis 500 mini. And what it's showing here is you can see the put volume. Look at this 108,965 puts to 1,370 calls, and you can see the PC here was 79.5. You know, has a 16.7 ratio. It was just a huge imbalance here of puts to calls, and so that was signaling that they were looking to take the market lower. You could also see here with the transports IYT that there was 69.71 puts to 165 calls, and so that was once again a big sign that people were looking to take the transports lower as well. And so yeah, in the chat on Thursday, I put out some alerts when this came out. We gave the posted that information, and then gave the heads up here on the chart. This is the CBOE mini S&P 500 index, and yeah, it was, you could see where it was at when the chart was posted. It was just clinging onto support here, and the theory was that it was looking to likely head lower here with the big imbalance of puts to calls. And so yeah, either a lot of people were going to be really wrong, or the market was heading lower. And so the call is to load SPY here, and then you can see here IYT was the same setup here with it was pushing lower, and then the heavy put buying into the close here on Thursday was definitely signaling they were looking to take it lower. And so yeah, you've got the big imbalance as well. And so let's take a look at the charts here. If you look at XSP here on the daily chart, you could see here it did end up breaking below resistance on Friday. You can see this is Thursday close, and then Friday actually had a big gap down open. And so yeah, just having that information about the heavy put volume signaled that they were looking to take it lower, and that set up a good trading opportunity. It gave a usually big money is usually correct. They usually have better information, and when you're trading options, the name of the game for a lot of people is follow the money. And so you're looking for those imbalances and for signs that people are looking to take a stock or into either direction, either up or down. And so it's just, in the stock market, it's just all about trying to be right. Okay, it doesn't matter which direction, if you're a trader, that it's heading. You just want to be right. And so you could see that close and open and close below this triple bottom support level. That signals downside risk. I had put out before about the this is like a triple top up here, and so you have 1, 2, 3 tops. Even though that the third top isn't quite as high, it still forms a triple top, and so breaking below support here is confirming the triple top. It's signaling more downside risk for the S&P 500. And so if you look here at the transportation average ETF, you can see here it's really beaten down. Now it's below 30 on RSI at 28.37, and it's below 20 on Fasto, and so that it is hitting oversold levels. You could see they drove it lower on previous pullbacks here, below 30 on RSI, but this is hitting that oversold zone. So in the next week or so, there should be a technical bounce coming soon. This is a very steep parabolic drop, and just like the inverse of a parabolic move to the upside can be unsustainable, this is getting pushed pretty hard to the downside. And so right now you can see it's hitting some support levels from back over here. This is from back in July, and it's trying to break below that July support where the high close was right there. And then you've got this support here from November, back in 2017. That's the levels that we're at now, are 2017 levels. The S&P, the transports are now below all the 2018 levels. All those gains have been wiped away, and now we're working in on wiping away the 2017 gains as well, possibly, if this downtrend continues. And so what you're looking at now, the big level is down here at 168. Okay, so that was the support from back here in November. That really needs to hold on an extended pullback. To the upside, what needs to happen is EMA 4 at 175.20. Okay, so that's this pink line right here. Once it gets a close above EMA 4, you can see it's harder to see on this chart. I wanted to show you the longer term support levels, but it's been riding the pink line lower this whole time, ever since the big red candle here. And so once they change the algorithm, once they change the trading program, allowing it to close above EMA 4, that's our first clue that they're trying to bounce. It's similar to over here. Okay, so there's this big drop. This red candle is a close below EMA 4. They're pushing it lower, pushing it lower, pushing it lower, and then this white candle right here, they closed above, and it got the bounce. And so that's what's happening here, pushing it, pushing it, pushing it. They let it close above, then you can get a little bounce going. Same thing here, they're pushing it lower, pushing it lower, pushing it lower, and then they get a little bounce going once it gets above EMA 4, and then it has to break the other moving averages to head higher. But that's how this is, like a dead cat bounce type of setup. And so what you're doing is you're trading in between the moving averages, and if it fails to break EMA 4 in the bounce, that always becomes the sell zone if you're trying to load on this break below the lower Bollinger Band. So keep that in mind. Right now at 172.06 is the lower Bollinger Band. It's hard to see on here. That's the purple line. But trading well below that signals, if it starts pushing well below the lower Bollinger Band, keep an eye on 172. You're likely to get a trade where it works back into the Bollinger Bands and it comes back to EMA 4. And then if it fails to break EMA 4, that'll once again be the temporary top. If it closes above, then it could possibly run up to 178.75, possibly test EMA 8. That would be the next resistance level. Okay, so now let's go and talk about S&P 500 for the rest of this video, and we're going to look at SPX here. This is the S&P 500 large cap index. This is a chart that I've been working on, and so the annotations are old on this chart. I've been doing some updates along the way, but yeah, basically everything's still in play here. If you look here on RSI, it is hitting the levels here that it bounced off of right here on the previous bounce back in what was that, October or November? It's going to be all about is it going to drive what it looks like it wants to do to me is RSI wants to come down to 30. If you look at previous bounces back here, right here, these bounces, those all happened when RSI got below 30 or tested 30 or bounced off of that zone, and so it just feels like that's where it wants to go. Now it could bounce off of this support zone. It's bounced off of twice this last year in this current zone around 35 or so. But if it breaks below 35, look for a drop to 30, possibly below 30. Now once it gets below 30, starts hitting that below 30 on RSI zone, that's where you're going to see people loading up S&P 500, in my opinion. That's where you'll see the bigger institutions maybe starting to take a bigger nibble out of this. Right now it's kind of in no man's land. We need a clear direction of what's going to happen. We do have the Fed on Wednesday, the Fed decision on the December rate hike, which most people are anticipating is going to happen, and then it's going to be all about the forward-looking language. What's the Fed going to say about 2019? That is going to move the market. Are they going to say a reduced number of cuts? All right, thank you very much. If they're going to say a reduced number of cuts for 2019, that could be rocket fuel for this market. we could get cruising. I mean, what if they don't raise in December? How's the market going to react to that? There's a lot in play right now, and so right now it's going to be all about the Fed this week, and we're going to see what happens with the because if the Fed ends up having maybe a reduced number of hikes for 2019, maybe that could be the spark to get a Santa Claus rally going. Now, if the Fed stays the course, and it looks like he's going to be, there's going to be a lot of rate hikes in 2019, that could add fuel to the bear fire, and that could continue this downtrend to the downside. I'm thinking that it's going to be, pretty volatile at least until Wednesday, and I'm sure after that as well. But I'm thinking there's going to be more downward pressure heading into that Wednesday event. I don't know that many people are going to be betting heavy on the upside prior to Wednesday and the Fed decision, because if that doesn't work out well, there's going to be better prices lower. So I think a lot of people hate uncertainty in the market, and so they might be waiting until after that decision to make a move for end of the year here. I think a lot of people are just sitting in cash. There was a giant amount of outflows in the market. There were a record amount of outflows, and if you remember back in January of this year, when there was a record amount of inflows, that's when they tanked the market. So back here, when all this push was happening back here in January, there was record inflows in the market. And what did they do? They tanked it. They dropped it right when all the record inflows came in. They pulled the rug underneath everybody, and boom. So what's happening now? Now we have record outflows. Okay, so everybody's just ran for the hills. So you have this circle up here at the top. Everybody's loading heavy, and then right here, everybody's getting out. And so usually the market is looking to do the opposite of the herd, and so that's kind of a nice setup for a potential bounce. Now it maybe everything is going to go just really south, and so how are we going to know if things are going to go super south? Well, there's several things going on in this chart right now. If you look right here, the triple bottom support level has been broken. So here there was 1, 2, 3, and so now that it broke below the triple bottom support, that confirms the triple top up here. A triple top is confirmed once the low support level is broken. That has finally been broken on Friday with the close below, and that does signal more downside risk for the market. And so now what you have is the major support level. This is the biggest support level of 2018. Everybody's been talking about it. It's the February and April lows, and so they're both lined up right here, right around this 2580. I mean, I'm sure people have a more specific number, but basically it's going to be all about staying above 2580, closing above that level. Now, if there's a close below 2580, that is going to be a red flag. That will be signaling that we could be heading lower. And then you do have the low of the year, which is this lower wick back here in February, and that's down here. You're pushing 2530s down here, and yeah, that's where the low of the year could possibly be tested on this pullback if the bulls don't step up. In order to get a bounce going, EMA 4 at 2631 needs to break. That's the pink line. As long as that's resistance, the bears are clearly in control. Once above EMA 4, you have the 400-day simple moving average at 2659. Currently, the S&P 500 is trading above all the moving averages, including the 400-day simple moving average. So this has gone, insanely bearish, and it's either going to get a heck of a lot worse, and we're at the start of a major correction for the market. This has been happening, or we're getting close to a bottom here and a temporary technical bounce. Yeah, if you look over here, when this chart was originally made, this was pinching up here on MACD, and so it did end up having a bearish crossover, and then this was starting to roll over up here. It was starting the bear cross on the 8, 13, and 5, and you could see that really signaled more downside risk for the market. Okay, so if we look here at SPX on the 15-minute chart, you could see here it's forming a potential double bottom here with the 14th and the 10th. You could see the closing price here, the low close on the 10th is just above 25.90, and then that is the key level to hold. It's probably 25.92 or so. If it starts trading below 25.92, starts closing below on the 15-minute chart, that's going to be a signal they're taking it lower. You can see the lower wicks here. We're down here in the 25.60 70s. It's going to be all about holding support, this December 10th support zone. If this level holds, this is a nice setup for potential double bottom bounce for a technical bounce play. But if they take it lower, which I'm in the camp of more like I think they're going to take it lower, then if it starts trading below 25.90, that's going to be your clue. Okay, yeah, there's more downside risk. Futures are trying to hang in there. Yeah, as you can see here with the quotes, you've got the the S&P 500. I just you never know how it's going to work out. They're running the Nikkei right now. It's up 1%, but it just has an ugly chart. They do have. If you look at the Nikkei here, it's been pushing down as well. It's bouncing after a red day, and yeah, the S&P 500. It's pushing lower. If you look at the Russell 2000, that is at the bottom of the chart there. It looks like that's heading lower as well. I don't know why people are buying tonight. And so that is a question. I think a lot of it has to do with the market makers not wanting people that loaded puts on Friday to be able to kill it on Monday. They want to be able to bounce it to wipe out that premium. There's a lot of the options action has a lot to do with how stocks are trading these days. If you look at SPY here on the Spider 500 ETF, you could see here it's the same kind of setup. It's at 36.95 on RSI, so it still has a lot of room to drop. I mean, is it going to bounce off of the November support level? It only bounced off of that zone twice this year, or I guess it once it got above that 30. But it just really feels like this is a bouncing off of 30 kind of setup. I mean, it is pretty interesting that RSI is still so high because it just feels like it's just really bearish right now. But at 36, it's just signaling there's a lot of room it could still drop. It could easily drop below 30, which would be still a big push lower from here. Now, Fasto is down here at 8.49. It tends to get a technical bounce when it gets below 20. It doesn't like to stay below 20 for an extended period of time, and so we'll have to see here. Down here it got below 20 for a few days, and then it pushed back higher. It just broke back below 20 on Friday, so it could stay down here for a couple days. You can see the last time it got below 20, it bounced right back above. So it's hitting that temporary oversold zone. Now down here, the triple bottom bounce level has been broken. The triple bottom here, the close below, and the close below that 400-day simple moving average at 260, 260. That signals downside risk. Breaking below support, signaling that they could take it lower. Right now, it's all about 260 this week. Okay, so 260, is a support zone from back here. That was the close here from the from back here in May, and yeah, if it's able to hold 260, maybe it could get a technical bounce and then get back above 260, 260, and it has to get above EMA4 at 263.50. Once EMA4 turns back into support, similar to right here, it can get that bounce going. Similar to right here, get that bounce going. If it's below the pink line, it's likely heading lower. You can see the lower Bollinger Band is pointing down. It just feels like, it looks like, it just seems like it wants to head down and test this February and April lows. I just don't see how we could be all the way down here and get some kind of sustainable market rally without retesting the lows of the year. I just think that that's highly unlikely. Yeah, so I think there's more risk to the downside than you're going to miss something to the upside by not trying to catch a falling knife. And so, patience will likely pay here for the people that are sitting on cash and waiting for that right entry point. Or if you're a trader, there's a really great trading right now if you're on the right side of the trade. This is a trader's market right now, and so you've got to be able to trade them, lock in those gains when they're on the table. When you're down here with this February low that's just above 254, that's going to be the big level to hold. If the SPY closes below 254, that should be the signal they're taking it lower, and it's likely to come down and test this 249, 250 support zone, which was the low of the year set in February. Okay, so it's signaling more downside risk. I see people are trying to play this right now, but it's a bull trap, people. I would not trust this bounce. I mean, that's just my personal opinion, and I could totally be wrong, but it just feels like a bull trap here with this setup, that it would be better to flush this baby out, get a nice drop, capitulate, have people stop trying to catch the falling knife, hit those lows, and then see a big volume spike come in and people start buying the market again in the beginning of January. That would be a good scenario. Or maybe the Fed comes out, gives us a good surprise there with some down, not as many hikes next year. The market likes the news, and we get a little Santa Claus rally going. That would be great for everybody. So right now on the SPY 15-minute chart, you've got a low over here on the 10th, and then right now that level is being tested. So if this drops below this 259.50 level, that's going to be a major red flag, and then you have this 258.50 zone, the low from the 10th. If it breaks below those levels, that should be the signal that it's going to drop further. That's going to be the big support zone to hold. It could easily form a double bottom bounce here, and they could easily run it back up. And if they do, you can see the top of this channel here. It's lined up with the 50 simple moving average in the 15-minute chart. If they run it back up to that level at 263.49, and that level fails to break, it will be the lock-in gain zone. That would be a similar to over here. It's down below, and they run it up to the 50, and then the 50 fails to hold, and they drop it back down again. And so that's the top of the channel, and it's lined up perfectly as the sell zone. If there is a technical bounce, that the bulls push the bears, they get a little, they start getting them to cover their shorts, and then boom, they run up to 23.50. It fails to break resistance, and then it could pull back and continue lower. That is one possibility. But if you do see it trading below that 259 level, watch out below. This could definitely come down and test that 250 range. Okay, thank you very much for viewing the video. If you'd like to learn more about charts and technical analysis, please come check out the chat. And yeah, be careful out there. If you catching falling knives can really hurt. And the stock market is all about the exchange of wealth from the impatient to the patient. All right, and you know how it is when there's blood in the streets. That's when you want to look to buy, and when they're drunk with greed, that's when you want to look to sell. I don't think now, with in my opinion, with RSI up here at 36.43, we've gotten the blood in the streets yet. Blood in the streets is this over here. This is a bloody mess. When you get down here and you're dropping below 30 on RSI, that's blood in the streets, And what happened on you can't see the volume bars. But yeah, it's just something to keep in mind. All right, you guys, I hope everybody makes lots of money this week and has a very happy holiday. Okay, thank you.